So today we'll talk about how I take profits on my trades, what are some techniques I use to manage my winning trades better, things you can do yourself, things that I follow for every single trade I take. We'll dive right in on the chart. It's going to be a pretty interesting video, I think. Alright, so the key thing about trading is you never know exactly how far price will go. You can try to predict and stuff and have levels and everything, but do we know whether price will respect them or not? We don't know. So having a way to manage your trades well is a very key pillar to good trading. Now here we are on this chart USD-CAD. I'm trading my typical Bollinger Band setup here, and I went back in the past to show this example, but we have a nice setup that appeared here in the market, right there. Now, how far price will go? Well, of course we could target this high. Of course we could kind of look at a bigger picture, zoom back and try to look at where we can go. And it looks like we have the high here. So can we go all the way from here to here? Can we get like a very big target? Yeah, maybe we can, but we don't know. We cannot really predict that in advance. So if I go here, I take a long here. If I limit myself to this high, I'm getting a pretty good reward to risk. That's maybe a 2 to 1, roughly, maybe 1.5 to 1. But maybe I'm shorting myself. Maybe I could get more than that. If I aim for this high, well, count an extreme, right? That would be a lot bigger. 11 to 1 in that case. So is there a middle ground with all of this? Well, we cannot know exactly what price will go. So having the right technique to manage your trades is a very big key to good trading. So here's how I do things. So I have 3 ways to kind of figure this out. First of all, I always use 2 targets minimum, which means I have a first target that would be closer to my entry that I just want to kind of like get to break even. I reach this target, I take some part of my trade off. It just gives me safety and it makes me kind of less anxious about the trade. Then I don't have to think about it. I don't have to second guess myself. I don't have to try to move my stop too tight. I don't stress about it. I just have part of it that's off. Then I kind of go with it and keep the trade open until a further take profit. That for me is usually going to be a 1-to-1. Why 1-to-1? Well, no reason, but when you get to 1-to-1, you kind of break even on your trade. So if price were to go back to your stop loss, you'll be protected. It's also a good level where it's like easily achievable. 1-to-1 is very quick to achieve. Once you get there, in this case, it took 1, 2, 3, 4, 5, 6, 7 candlestick. So daily charts, so it's a bit longer here, but it's very quick anyway, no matter what. Then once we're there, we're kind of done with it. We have half of our trade we take off. Now it could be half, or it could be more, it could be less, depending on what personality you have. Take off more, take off less, it doesn't matter. You can go and take out half your trade. You can go and take out a third of your trade, 25% of your trade, whatever works there. I'll tell you that if you are in a trending condition, like where you have a strong trend, then definitely take off less at that first take profit because price is likely to trend more. So you don't have to really take off a big part. Now I'd primarily trade myself reversals. I'll take off a little bit more at that first take profit. So half my trade I take off at the first take profit. Now the second half, I use 2 techniques to kind of manage it. First is obviously the stop loss. Everyone knows what a stop loss is. Not everyone wants to use it, but it works really well. So my stop loss is always where the trade is invalidated. So whenever it doesn't make sense to keep the trade anymore. When you go long the first time, stop loss will be here. If you go to this level, well, we're probably not gonna have that trade working out. Yes, price could go down, could kind of stop us out and go back up. But in most cases, if we hit this level here, price will just go down even more and we won't have a good trade in that case. So I want to keep that very clear. And that's where my stop loss is, where price gets there. It doesn't make sense to be in the trade anymore. Now, once price get to 1-to-1, where could the stop loss be? Well, probably still here because we didn't make a new low that's significant enough to tell us that we are going to keep going higher. Right? We could just reverse here, go back down, and boom, and that's it. Now, we could take a chance moving a stop loss to break even, but I don't really recommend that because it's not a logical place here for a stop loss. What tells us we won't get back to break even and be stopped out? Nothing. There's no logic to place a stop loss at break even at our entry when we hit 1-to-1. It's just not a logical place. Now when we make this low over here, this low right there, then we have a new logical place for a stop loss, but we gotta wait for price to make a new high. So if price makes this new high over here, right, see this is higher than this one, then it makes sense because then we know we have a higher low, right? We're going up on this move, so we have a good place for stop loss here, just below the low. So I move my stop loss here. Not a big difference, very small, but this is a logical place to be to know where you're wrong. If price goes there, we go either in a sideways market or we go on a downtrend, possibly, but we're not going to be trending to the upside anymore. Now, we'll keep it going like this until it doesn't go anymore, until we get stopped out. That's one way to do it. So whenever price makes the new low, which now will be over here, wait for price to make a new high, which our high was here, new high is here, Boom, new high here. Stop loss goes right there. So moving from here to here. Not a huge difference, but good enough to now bring break even and maybe having a small profit in this trade. We continue. And we're not stepped out here. I don't think so. No, looks like not. Price makes a new low. Okay, equal low. We're not gonna move a stop loss yet. We're gonna keep it the same level because we don't have to chase the price. We don't have to do anything about it. Price makes a new high. That's good. Trending again. Right, see, we kind of went from sideways here to then trending once again. After that here. Now we're making a new high. That's a good sign. But stop loss doesn't have to move. It will still be the same level anyway. Okay, wait for new low. We have a low here. Move stop loss here once price makes a new high, which it did over here. Move stop loss to here. Again, we go from here, where we're here, the same level, to then here. That's a pretty significant change, right? Now, worst case scenario, we got out of this trade with a 2.42 to 1 reward to risk, which is pretty good, to be honest. But we keep it running. Okay, price makes its high, come back to do a new low, and we're stepped out right here. Okay, price went there, dipped a bit more. At this point, I don't want to keep the trade open anymore because we have a pretty big dip in that case. We could re-enter here somewhere along the way to keep trending this again. You have a nice trade setup, but it looks like now we're just going back sideways, and that's not a good place to be in a trade. See how we were clearly on the right place. If we said, right, that we keep a stop loss where we're wrong. Stop loss is here. If price goes below this level, then we're wrong. We don't want to be in the trade anymore. It doesn't make logical sense to be in that trade anymore. And look how price hit the stop loss, came back down, went all the way up to the same level roughly, not a big difference, came back down, and then came back up and down, and now we started like a downtrend. It's really not beautiful. It's very sideways and choppy, and we don't have anything to do with this trade anymore. It's a good place to get out. The second way to do it is using logical targets based on the type of trade you're looking for. So if you look for a reversal trade, it's very tricky, but you can actually look for the high of your range, right? That or high will be somewhere here. Actually, look at this. It's pretty interesting. The high of a range, which was right over here, is about the same place as we got out, right? We got out here. Stop loss was right there. This is the height of a range. This was a logical place to put or take profits in that market because it's the height of a range. Now, we could be a bit more conservative here, but it didn't make a big difference. We could either have reached this target in all the way here, which is December 5. We took the trade in August, which is very far, a long time. Or we could have got into this move here and getting out in September, like a month after, or less than that. It could be a good place for a target too, where we target the height of our range. We know if we get there, we're gonna get out of the trade. It doesn't make sense to keep holding more. For the small difference in profit we could have had, that is not making a big difference. So these are very useful. If it's a ranging market, target the high or the low of your range with a bit of buffer, of course. If it's a trending market, let's say we go long over here. Now this is in a trending market now because we've been going up and up. We have a nice pullback, we go long. Then where's our target? Well, you could say, okay, I'm going to target here. Yeah, sure, that's good, but that's only the height of your trend. Only most recent high. We can go much further than this because we are trending to the upside. We have a pretty strong trend going up here. Instead of trying to catch the top of the target, we got to rely more on these stop losses we're going to move over time. So you get on your trade, stop loss here below. Price makes a new high, makes a new low, makes a new high again. Stop loss here below. Okay, price goes sideways for a while. We don't touch anything. Makes a new high. Okay. Once price is here, we know this is going to be our low now. Stop loss there. Price goes up. Okay, makes a new low, makes a new high again. Stop loss goes here. See how we trail the stop loss over time as we go in our favor here. And this is how we can get these really big targets too. Okay, price makes a new high, comes back down, and looks like we're gonna get stepped out right over here. Now we cannot catch the top, but it's impossible to always catch the tops in trading. You cannot just always kind of aim for the top because you don't know where that top will be. It could be far, it could be closer. You can look at candlesticks. I don't necessarily do that myself too much because I want to wait for my stop loss or my take profit to just be triggered. I don't really monitor my trades too much. I just keep it very simple, where I just get in a trade, I keep it running, and get out when it's time to get out. And that's kind of the case here. So in any way, this type of trade will give us a 6.5 to 1, which is pretty acceptable, pretty good for this kind of trending condition. So in sideways, you go for the top and the bottom. In trending, you go more stop loss based, where you move your stop loss over time, try to get a better exit and better exit over time. and then you kind of keep trailing it. And don't feel like you're stuck if you don't catch the top or the bottom. These things happen, they're part of trading. And our goal is just to be able to do a best way to trade and kind of keep it running. And we never know how far price will go. Any questions on this, let me know below. I want to hear your thoughts as always, your comments. Let me know what you think. Let me know if you have any other ways to do it. I'm curious to hear what you think and how you do things yourself. Here are some videos to check out next. YouTube think you will like them. And I'll catch you back here in the next video pretty soon. Ciao.